All right, welcome everyone. We begin with a sobering reality just in terms of what's happening with the U.S. markets right now. Let's take a look here. The Dow is down more than 6%. The Dow is down 1,700 points plus. The optimism of a quick economic recovery is now waning. And let me explain why. The fear of a second wave of coronavirus is taking hold. And as the U.S. economy reopens, new cases are being reported daily. Another 1.5 million Americans filed for unemployment last week. That's 44 million people since way back in mid-March. And finally, uncertainty over stimulus and the U.S. presidential election. I want to bring in Alicia Levine. She's joining us live now from New York. She's the chief strategist at BNY Mellon Investment Management. Alicia, thank you so much for being with us. So when you look at what's happening with the markets right now, is this proof that stock market was unfortunately a little bit too optimistic? Since the beginning of this pandemic, it's always sort of seemed to have one foot out of reality. And now I guess it is starting to wake up.
Hi, Zane. It's great to see you. Look, the move off the bottom was historic. It was 43% up from the lows. And the speed at which that happened is actually never happened before. And in the way we came down so quickly in February and March, we retraced it pretty quickly as well. You know, when it feels easy to pick a stock and it goes up, that's kind of a signal that things are getting frothy. And certainly in the last couple of weeks, it felt that way. However, for the most part, the rally has been in the non-cyclicals, meaning in the tech stocks, in healthcare, in large box retailers. And these are the kinds of companies that are actually having their prospects improved by the shutdown. So it wasn't entirely crazy.
Okay. But just in terms of what sort of recovery we're going to be seeing, I'm sure you remember some people early on were talking about the possibility of a V-shaped recovery, as in things get really, really bad and then they get better. And now when you think about the rising cases in certain states across the South, are we anticipating more of a W sort of shaped recovery where things get better again and then worse again and then finally get better?
Yeah, so look, economists have an alphabet soup here on how to think about the recovery. What Jay Powell described yesterday was essentially a soft V, an asymmetrical V. So you come down quickly, and then it takes you 2.5 years to really recover to where you were before. And that's slower than what the market has been pricing in. The market's been pricing in a pretty nice, quick recovery. However, let me just say this. The market is a forward-looking mechanism, and we think the direction of travel is upward. That doesn't mean you can't retrace some of the move here, and it doesn't mean you can't have a consolidation. Some of the uncertainties you talked about, will we have fiscal? Will we have more cases that force certain shutdowns around the country? That's all the uncertainty out there. But the basic message is that the direction of travel is upward. And so the market will anticipate that and price that in.
Yeah, I think that, you know, despite some of the market fears, there are clearly some bright spots. There's the fact that we've got accommodative monetary policy. There's also the fact that the unemployment rate overall, what we got on Friday, ticked down slightly. The weekly jobless claims falling. And actually, MasterCard came out and said that in May, spending was actually quite similar to pre-pandemic levels. So there's a lot to be, I get what you're saying is that there is a lot to be hopeful for, despite some of the negative news we're seeing.
Yeah, that's right. Look, you know, the market trades on rates of change, and the rate of change is positive here. You can't get worse than the worst ever. So it's getting better from that. I mean, I think many of us who've watched markets for years were shocked that there was no retracement over the last 10 weeks. You know, it was almost a straight shot up without any kind of consolidation. So it's healthy to have this here, but there will be bumps and fits and starts. I'm not entirely concerned about the new cases as it comes to the economy, only because I think the bar to shutting down again in different regions is extraordinarily high. I don't think we're going to do that again unless the healthcare system gets overwhelmed. And so far, we're not there yet. And so for the most part, the direction of travel is upward. I'd say this to investors. You know, in the end, you should be exposed to the non-cyclicals and to the tech stocks, which are really the direction of the economy here.
All right, Alicia Levine, thank you so much. Appreciate it.